Hello and welcome back to our second video dealing with Chapter 3. And Chapter 3 still talks about job order costing, but this time we're looking at cost flows and external reporting. So I know the last video was quite long, and I apologize for that, but I wanted to cover everything in kind of one video. But you have the luxury of being able to pause, fast forward, speed up. So you should have been okay as far as if it got a little boring or there were some things you knew that you could have fast forwarded through those. That's okay. But what I want to do now is I want you to turn to or pull out rather your study guide, and we're going to work on the first exercise, which deals with, and if you could see I have it here pulled up, which deals with exercise 1, preparing T accounts. Okay, if you notice I gave you a lot of room, I gave you an extra page. So what we're going to do now is we're going to go through and we're just going to draw our T accounts and how we need to move them. Now you guys have seen the first video for this chapter. You have the PowerPoints, you have that overview. Do me a favor, pause the video and just try it. Give it a try, come back, and then we'll go through all the correct answers. Okay? Alright, so hopefully you paused the video and gave it a shot. So we got Morty Enterprises, and we have the following transactions A through H. Okay? What we're going to do is we're going to post all those transactions using T accounts. Okay, you can just write them in, not a problem. And then we're going to determine the adjusted cost of goods sold for the period. We haven't discussed that yet, but I'll show you how to do it. Okay, so the first thing we need to do is we're going to say A, right? And A tells us $94,000 in raw materials were purchased for cash. Okay, now I know you guys are nervous about accounting and whatnot. It's easy. Here's why it's so easy. The problem tells us, or not the problem, I'm sorry, the details of the transaction A tell us everything we need to know. It tells us which accounts we need to use and the dollar amount. All we need to do is just read the problem and pull out what we need. Okay? Remember, every transaction, whether we're using T accounts or you're actually doing the journal entry, okay, there's always three pieces. Number one, the dollar amount. Number two, the debit account. Number three, the credit account. Okay, if you know two of the three, guess what? You can figure out the other piece of it. Okay, so we already know the dollar amount's $94,000. They tell us we bought this in raw materials. So guess what the first account is I'm going to use? I'm going to abbreviate and just say raw materials inventory. Okay. The second account that we're going to use is our cash account. How do I know that? Because it tells me that we bought $94,000 in raw materials using cash. We purchased that for cash. Okay? So, if you remember from the last video, right? Raw material inventory is an asset account. I always increase it with an asset, or I always increase an asset with a debit, right? So remember, left side's debit, right side's credit. Always, always, always. Doesn't matter what T account we're looking at. Left side always going to be debit, right side always going to be credit. So we need to get this into raw materials. So we're going to debit raw materials for $94,000. Okay. So that's one piece. We have the debit and we have the amount. We know that the account that we used to buy this is cash. So by default, guess what? Cash has to be a credit for $94,000. Okay, that's A. Now let's look at B. B says $89,000 in raw material were used in production. Of this amount, 78,000 was for direct materials and the remainder was for indirect materials. Okay, so let's see if I can change the color on this puppy. Hey, yeah, we can. All right, so probably going to run out of colors, but I'm going to use green. Okay, so for B, we need to recognize here we're actually using 3 accounts. Well, how do you know that? Well, I know that $89,000 in total of raw materials are being placed into production. Of that $89,000, $78,000 of it is for direct materials. And you should remember that direct materials flow to the WIP account, the WIP inventory account. I'm just going to abbreviate it with WIP. The indirect accounts, or the indirect materials, flow to manufacturing overhead. Okay, so I'm going to credit raw materials for $89,000. $89,000. Okay. I know that 78,000 of this is direct materials. Direct materials flow directly to WIP, so I'm going to debit WIP, or I'm going to make a left side of the T account transaction for 78,000. And I know that the remainder, so 89,000 minus what, 78,000. If my math is right, should give me 11,000. That means that the indirect costs of 11,000 have to flow to manufacturing overhead. The left side of MOH is my actual. The right side is what I apply. Okay, so these are actual costs incurred, so I'm going to debit, which would be the left side of the T account of manufacturing overhead, for $11,000. Okay, that's B. Let's look at C. Hey, total direct labor wages of $132,000 were incurred and paid. Of this amount, $112,000 was for direct labor and the remainder was for indirect labor. So I'm going to change the color again, and I don't know what color is orange. Okay, so we know that we paid direct labor. Okay, so what we're going to do is we're going to pull up our salaries, and I'm going to abbreviate and say sal pay, or salaries payable account. Okay, and we know that the total amount is $132,000. So we need to get it out of accounts payable. How do we get it out of accounts payable? We do that with a credit, which is the right side of the equation, or I'm sorry, right side of the T account. So I'm going to hit the right side of the T account of accounts payable for $132,000. Okay. Of this $132,000, I know because the problem tells me that $112,000 of it is for direct labor. Where does direct labor, what's the account or the bucket that holds direct labor? Well, think about what we're doing. We're applying direct labor to a job, right? That job is being conducted on the shop floor. The shop floor, we said, remember, this is like the bucket that holds all our work in process accounts, right? So this work is going on. specifically $112,000 of direct labor. So I'm going to debit or hit the left side of the WIP-T account for $112,000. The remainder of $132,000 minus the 112, my math's right, should be what, $20,000? That is indirect. Where does indirect labor go? It goes to our MOH account. So I'm going to hit that with a $20,000 debit, which is the left side of the account. Okay. A says additional manufacturing overhead costs of $134,000 were incurred and paid. Okay, so I'm going to assume that this is cash. I'm going to assume that I use the cash account. So I'm going to change colors again, use pink here. So I'm going to credit cash because I need to get it down, right? Cash is an asset. I decrease that with a credit. So I'm going to use the right side of the T account, and I'm going to credit it for $143,000. Okay, I know that this 143 is actual manufacturing overhead costs that I incurred. Okay, so I need to debit, or I need to hit the left side of the manufacturing overhead account, because remember, the left side or the debit side is the actual expenses we incur, which is $143,000. Okay, remember, this other or additional manufacturing overhead, that could be utilities, rent, depreciation, taxes, whatever. Okay, so that was D. Now E says manufacturing overhead of $152,000 was applied to production using the company's predetermined overhead rate. So that means that they figured out what their estimated manufacturing overhead was, divided it by the estimated the estimated cost driver. They came up with a dollar amount. That predetermined overhead rate dollar amount was then multiplied by the actual cost driver. We don't know what that is, but we do know the total amount of that transaction of $152,000. So what they're saying is we're applying it, so we need to get it out of our manufacturing overhead account and get it into WIP. Okay, how do I do that? Very, very easy. We use blue. So they tell us that the dollar amount is $152,000. Okay, it goes into WIP. So I'm going to debit WIP for $152,000. Okay, and that's the left side of the T account, the debit side. Okay, so they tell us that F, all jobs in process at the end of the month were completed. Okay, great. So that means that this total amount, and let's add this up. So that means the 78,000 plus the 112,000 plus the 152,000, that equals $342,000. I'm just going to put that down here, okay? They're telling us that all these jobs were completed, okay? What that means is that this amount of money needs to leave WIP, and remember, what happens to the costs that are completed? Well, just like physically, the account or the products leave the shop floor and flow to the finished goods area, that physically happens. We can envision that, right? Well, from the accounting standpoint of it, we say that, well, we look at the shop floor and we say we think that, oh, that WIP or that shop floor actually is our work in process inventory account, and we think of it as a bucket that holds all the costs as we're making the product, right? Well, just like those completed physical products leave WIP and go to the finished goods account, so do those costs that are associated with it, meaning it leaves the WIP account and goes into the finished goods inventory account. So what I'm going to do, switch colors here, let's use this red. So we need a third account, or we need another account, I'm sorry, which is, I'm just going to say FG, not field goal, but finished goods account. So we're going to credit WIP, or we're going to hit the right side of the WIP T account for $342,000. Oh, bear with me here. Okay, $342,000 is going to be credited from WIP, and it's going to flow to the finished goods account, which is $342,000. Okay, that was F. Now G says that all of the completed jobs were shipped to customers, so that means they leave finished goods. We got to get them out of finished goods, and we put them into our cost of goods sold account. So right here, these are all our balance sheet accounts. Finished good is a balance sheet account. We got to get it off the balance sheet and onto the income statement. Okay, how do we do that? Very, very, very easily. I don't think I used light blue yet. So in order to do that, I'm going to come over here and I'm going to create a T account for my COGS, costs of goods sold. Okay, so I'm going to take $342,000 and I'm going to credit my finished goods account. I'm going to credit it because it's decreasing, and basically the finished goods account, in order to credit it, I'm going to hit the right side of the finished goods T account, and it's going to flow over to the income statement. And what I need to do is I need to debit my cost of goods sold account for the same amount, $342,000. Okay. Now H, any underapplied or overapplied for the period was closed to cost of goods sold. Okay, so I got to figure out if I underapplied or overapplied. I'm gonna go back to black. Okay. All right. So in order to figure out that I underapply or overapply, I need to go to the manufacturing overhead account. Okay. Right off the bat, I already know that I applied $152,000 of manufacturing overhead. Okay. How much did I actually incur? Well, to figure that out, I need to look at the debit side or the left side of the manufacturing T account, and I'm going to add up all these costs. So I have $11,000 of indirect material plus $20,000 of indirect labor, plus I have $143,000 of other manufacturing overhead costs that I incurred and paid. Gives me $172,000. Okay. Now right off the bat, I can tell that I underapplied. How do I know that? Well, because the amount of overhead that I applied is less than the amount that I actually incurred. Okay, so actually that should be 174,000, not 4. Okay, 174,000. So the difference between these two is $22,000. Okay, Difference between these two is 22,000. So that means that I underapplied overhead by $22,000. Okay. I need to fix this. I know I'm going to fix it to cost of goods sold. Okay, so what do I have to do? Well, if I'm looking at the manufacturing overhead account, it's $22,000 short on the applied side. Okay, so to fix this, I'm going to credit manufacturing overhead $22,000. That means now that the balance in this overhead account is zero, meaning it's 174,000 worth of debits. Now it's $174,000 worth of credits. Okay, so this account is even. I'm good now. Okay, but remember, I need to fix it to cost of goods sold. So since I credited manufacturing overhead account by $22,000, I now need to debit the cost of goods sold account. How do I know that? Well, because I got to have a debit and a credit. I have a credit right here, so I need I have to have the other part of this transaction has to be a debit. Okay, it's going to be $22,000. Now think about it this way. Okay, here's an easy way to think about this. 22,000. Okay, I didn't apply enough overhead, right? That means that this WIP account, this total WIP account of $342,000 is too low. Okay, it flowed to the finished goods account, right? 342,000. It's still not enough, right? It left the finished goods inventory account and flowed over to the cost of goods sold. My cost of goods sold now is actually too low, right? It's $22,000 too low. Why? Because I didn't apply enough earlier in the process. So I'm now going to add it, and by adding it, I mean I'm going to debit my cost of goods sold for $22,000. So if I take my $22,000 plus my original cost of goods sold, $342,000, I see that my new cost of goods sold is $364,000. This right here is the adjusted cost of goods sold. This original amount that I had is my unadjusted cost of goods sold. Okay? So we just went through your first problem using T accounts. Okay? If you have any questions, guess what you can do? Write them down and text me. And I'd be happy to set up a time so we can talk and go over all this stuff. Okay? If it's as clear as mud. Hopefully it's not. So that's all we're going to do in this video. When we come back in our next video, we're going to look at cost of goods sold and cost of goods manufactured statement. We're going to see how to prepare those. Okay? So please tune back in for that video.